After a resounding comeback, Modi government is now on a mission to chalk out plans for the first 100 days and even the next 1,000, I can say, or the first 1,000 days of its second term. There seems to be a clear understanding in the government, from the PMO to the Chief Economic Advisor to the Finance Secretary, that unless construction and real estate is revived, the economy and job creation will remain a challenge. Today on The Real Deal, we focus on the realty arm which got hit the worst under BJP's first term, which is India's residential real estate. And the picture is clear. The worst may not be over. Everyone agrees there's still pain ahead. What can bring this limping sector back to life, and what should the government's priorities be? Joining me today to answer some of those questions, Anshuman Magazine Chairman and CEO, India, Southeast Asia, Middle East and Africa, CBRE, Amit Bhagat, CEO and MD, ASK Property Investments Advisors, JC Sharma, Vice Chairman and MD, Sobha Limited, Pankaj Bajaj, MD, Eldeco Infrastructure. Pankaj, because you're the closest to the powers here in Delhi, let me ask you, what should the immediate priority be for the government? Should it be to resolve the liquidity crisis, which we know has not moved out, in fact has become worse for the sector? Whether it comes in the form of getting bank funding opening for land, what is your view?
I mean, that's
first 100 days.
That's the obvious answer. I mean, we can talk about the medium term and the long term, but a lot of my people in my fraternity may not be around for the medium term. If this
so 1,000 days may not be an option. It is 100 days.
So let's talk about first 6 months, 3 months or 6 months, an immediate liquidity injection, and that's for the policymakers to decide. Why has liquidity?
How can they do it?
Why has liquidity dried up to this sector suddenly? So something happens in IL&FS, and suddenly the public sector banks had retreated from the space a long time ago. That was filled in by the private sector banks. But then this whole NPA thing happened, and even they retreated. And the credit function was in a way outsourced to NBFCs, who borrowed from banks and mutual funds and commercial papers, and they were lending to real estate developers and as housing finance companies. And I am told that that figure is now almost 40 to 50% of the entire outstanding to the sector. And now after September of last year, that has suddenly got jammed, and people just want to withdraw their loans, don't want to get... so this squeeze, this crisis of confidence, to my mind, is an artificial kind of crisis. Some kind of confidence building measure. Somebody pats their back and says, it's okay, just lend and your money is coming back. And money is actually coming back. It's not that it's stuck. But it's just that people are just holding on to their money and not lending. So
how do you... Oh, right. Let me go to the other panelist, Amit Bhagat. I mean, what is happening on the liquidity front? I know that everyone's tightened their purses, and real estate has probably faced the brunt, along with many other sectors. It's not just a loan, but here there are home buyers involved. I mean, every time that you do not get the money, the project comes to a grinding halt. How do you think the liquidity crisis can be taken care of by this government in the next 100 days?
See, I think we are expecting a lot from the government. If you look at the last 5 years, it is a wake-up call after the IL&FS crisis. The way the lenders have not exercised prudence in giving money to this sector, and all NBFCs were playing a valuation game by increasing quarter on quarter their assets under management, somewhere I feel that there was not prudent exercise of risk management framework by lenders. And we want government to set it right.
Okay.
I think the government can only provide liquidity, but after this wake-up call and the consolidation which has taken place because of the structural reforms, if the quality is now being differentiated, the only thing which probably confidence can come back with the lenders is, lenders should not paint all developers with one brush by saying refinancing will not be available under any circumstances to any developer. They should now focus on quality, because whenever consolidation happens in any industry, quality will always get a premium, and quality should be differentiated and focused upon by lenders. And in consolidation, there will be some players who will not be in this business in short term, medium term and long term.
Okay, fair enough. You're saying, why are you expecting the government to clean up the mess when there have been NBFCs which have gone out aggressively to get business, have lent without adequate risk management practices. So that brings me to the other big question, Mr. Sharma, and I really want your view on it. Large corporates like you do not have a liquidity issue. At least maybe you're paying a slightly higher rate of interest because of the funding crunch. But there's a big demand from the industry per se, CREDAI per se, that why don't banks open up land funding? Do you think that's a valid demand, looking at the risks that the sector brings in? And most of the inflated figures which come at the stage of land buying.
Manisha, it's a good point, but please understand, as far as real estate developers are concerned, they are giving some tangible, monetizable, good security. If you have seen today the NPA problems, where most of the companies where via NCLT or otherwise, the recovery has not been to the extent it was desired, and they do not have any underlying assets, I believe that this sector needs to be looked at with an open mind. Of course, there have been issues with the developers. But what has happened post-IL&FS crisis is somehow ensuring that the viable developers also, they have started suffering because of whatever the last mile gap they had, it is not getting bridged, and the sentiments remain as difficult as it was. Now, it has helped few developers like us. We have done exceptionally well in the last financial year, and some of the companies you must have seen in the listed space, they have done very well. But that's not the issue. The bigger issue is that the sector needs to be provided liquidity, the sector needs to be provided money at lower rate of interest, and the sector needs to be supported where they have adequate collateral or receivables to ensure that the sentiments come back. Okay. Otherwise, what you are seeing in NCR, most of the real estate companies today, despite Supreme Court's intervention, despite NCLT's intervention, the customers are not getting the relief, the banks are not getting the relief, and the developer also has not been able to do anything. So wherever there is an equity in the project, I think it is the right time where this government must focus, look at that equity, look at what is required, additional funding, and through a proper escrow mechanism, the funding needs to be given at a lower rate of interest.
All right, lower rate of
interest.
The reason why the NBFC crisis and the liquidity crisis has happened, Anshuman Magazine, is because the banks have always been very shy of lending to real estate. Now, if you want to change the entire narrative of the fact that real estate is a risky business, very few developers can be trusted, there has to be a complete thought change, not just in the government, but most importantly, at RBI stage, because I mean, how are we going to convince RBI that you should open the taps for land funding?
Certainly the number one issue is liquidity. This sector has to be kind of irrigated with liquidity if anything has to be done. The fact is, I think there's enough learning even from the RBI side that we know who are the developers, who are the people who have defaulted, but there are others who have done a good job. And really, RBI has to, and there is no reason why, like Amit mentioned, that to brush all the developers with same paint, and the fact remains that a lot of people are suffering because of few people's mistake. You talked about land financing. NBFCs, some of them were doing it, and there's no doubt that if we want to, because we have to stimulate supply and demand both sides. On the demand side, we do still, there are certain tax benefits one can give, especially in the residential side. You can work towards lower cost of loans for buyers, and do whatever else incentives one can give so that consumption increases. On the supply side, certainly, like everybody mentioned, that there has to be the banks who have to come in, because you can't depend on NBFCs only to lend to this sector, and also lend to for land purchase at a lower cost. Now, this is easy said than done, but there is no way out for currently in the situation we are in, especially in residential domain, but to government to somehow facilitate funding to this sector. And you can keep on discussing many other things, of course, besides the liquidity, which is the most important and urgent need, and there has to be some way for those taps to be open, like you mentioned. The other part, which what we do realize but need to focus on, is how we can pick up the overall economy, because if that doesn't happen, the confidence will not come back. RERA is actually a good something which will bring in the especially on the residential side some confidence, but the government has to fast track implementation of infrastructure projects, because that's going to help the supply side, because we do need to look at the supply side also, and that the only way can be done besides liquidity is implementing. There's enough money implementing infrastructure projects in a fast-track manner.
Okay, so fair enough. So what you're saying is that this has to be the priority. Next 100 days, I think the biggest priority that the government has is to figure out how to open the financing taps. And that's really critical, because if it doesn't happen, you're going to see more distress in the sector. You will have more real estate projects getting stuck and more home buyers losing trust in the market. Having said that, I sense that the bigger agenda which you will hear from the government in its first 100 days is affordable housing. Let me come to that. Mr. Sharma, I mean, there was no lack of government's attempt to accelerate affordable housing in the last 5 years. In fact, it wears it as a feather in its cap that, we've achieved such high numbers on urban and rural housing. They had 8 models for private sector as well. Till date, I have not seen the private sector's definition of affordable housing match the government's affordable housing definition. It is unviable for any one of you to bring out in large cities homes at a price of under 30 lakhs. What would you like the government to do that you can participate in that big market which is also there for all of you?
It's a very valid point. We have, in the last financial year, have launched 2 large projects, one in Gift City and one in Bangalore.
So what is the pricing point? Mr. Sharma, I'm sorry, when we say affordable housing, my basic question is what the government is calling affordable, what you are calling affordable, the private sector, are 2 very different things. At 40 lakhs, it becomes affordable for private sector, but that is not the market we are talking about.
You have a point, but then we need to look at today in India, to invest in a land, right, and then to do a construction, good quality construction, and thereafter to have a very small margin on such projects, you may not be able to achieve the 30 lakhs criteria until unless the land cost is relatively much less. Okay. Instead of looking at an FSI cost of say 500 to 1000 rupees a square feet, the land cost has to be then 100 rupees to 200 rupees a square feet.
All right, so hold your thought there. So that's exactly what I wanted to hear from you. Pankaj Bajaj, I mean, you've decided you don't even want to get into that segment, right? How many times did we have Mr. Hardeep Puri come and talk at CREDAI meetings and say we have these 6 models, then it became 8 models of public-private participation, we will give the land, you guys come and build, but it's still not worked. Crux of the problem remains land. Everyone wants to extract a pound of flesh. Anytime a land is coming into the market, okay, tell me what the issues are.
So, by definition, affordable housing is wafer thin margin. It has to be, because it is low cost, so it's obvious that the margins have to be very small. And when you put in cost of funding and time value of funding, so you can't afford any delays. I'm giving the crux of it to you.
Okay.
So from the time the project is conceived in a promoter's mind and he starts investing money, buying land, to the time he hands over the keys, to my mind, it should not be more than 2 to 3 years. But typically, we take about a year to assemble the land. Then we take another 1.5 years to get the approvals. Then some environment clearance matter comes, and then it says that no, the state level environment committee is not sitting here.
Wonderful improvement and ease of doing business has not translated to it.
So typically, from the time you put in your first rupee in the project to the time you exit, it is not less than 7 or 8 years. Now, in that time period, how can you have affordable housing when the time value of money, it just starts building on itself. So unless I get a pre-packaged project, the government gives me something, or it's right there on the platter, the approvals are there on the platter. And of course, we've been asking for single window, and it's easier said than done. I understand the government's conundrum also. There are multiple agencies involved. We have to get 56 approvals. Now, once you start adding all that up, escalations over time, now it no longer remains affordable. The cost of construction, even in a zero inflation, if we assume zero inflation, okay, it remains stable. But what about simply the cost of time which goes? So unless I can turn around the whole thing in 3 years, I see it as a
And the government will continue to have to do its bit by
so when we say
adding
government,
up its number on beneficiary-led
homes
or state governments.
When we say government, who do we mean? Do we mean the central government, which has its heart in the right place, I believe, because they actually want to do it? And now with the talk in the last 5 years being that of jobless growth, we've had growth, but we probably not had jobs to go with it. And this is one sector which everybody agrees can create jobs. So they want to do it. They want to turn around the sector and unleash the power of affordable housing. But there's central government. Then there's state governments who are looking at this, the approvals, bring their own, they want to control the approvals at their end. Then there's the judiciary. Because then every time the government wants to ease the environment clearance norms, the NGT comes in or the Supreme Court comes in and they say, oh, we're playing with the environment. So there are these multiple, it's a hydra-headed thing which we have to...
Which you have to look at, all right. But it is an agenda. There's a saffron bay. We looked at the saffron across the country. So at least on the center and the state part, there can be a handshake. Environment, of course, we will have to look at responsible development. When we come back, how can this government resolve the misery of stuck home buyers? We touched upon that very briefly. Unfortunately, RERA has failed so far. Insolvency process has not worked either. This one needs a much bigger thing. Stay with us. What should the government be doing in the next 100 days to revive real estate, especially residential real estate? With over 6 lakh homes across India, majority of them in NCR already delayed by almost 4 years. And despite court intervention, despite RERA, almost no case of severely stuck project getting any resolution under NDA 1. The mandate of NDA 2 on this becomes extremely critical to revive India's home buyer sentiments. Amit Bhagat, any ideas at all? This one is a conundrum and a difficult one to solve.
So the first thing the government should do is that GST incentive of 1% which they have given to the affordable housing, and the definition of affordable housing is 45 lakhs and 90 square meter and 60 square meters in non-metros and metros, should be extended to 75 lakhs to include the mid-income buyer also. Because they also need affordability. By doing this 5% GST without input tax credit, you are making homes expensive for them. Second thing which they should do for all the stuck projects, they should make changes in RERA where if a good developer is willing to take over that project as a development manager or a project manager, he should not be treated as a promoter under RERA, and lender should take control of the bank account and allow that developer to complete the construction without taking over the liability. Because the current process is very, very cumbersome. The developer has to first go and take consent of all customers, then creditors. Lender obviously is on his side, and then he is accepted as a promoter under RERA.
Right.
He is not sure of the design, the structural. So I think there are too many impediments in clearing the stuck project. So if you incentivize home buyer by extending that 1% to 75 lakhs and give some incentive for buying second home also to the mid-income buyer. I'm not talking about luxury buyer, but the mid-income buyer. So if you go back 2 years back, the budget took over the negative arbitrage. So if you borrowed on the second home and the negative income from the rent less the interest paid was allowed you as a set-off.
As a set-off, which was
that has been taken away.
Correct.
If you look at mid-income has no other place to invest. So if you give these two incentives and clear the impediments under RERA for taking over the stuck projects by good developers, you can actually revive the demand.
I think these
demand will take care of the liquidity.
Extremely important points that Amit Bhagat has brought to the table. Anshuman Magazine, very quickly, your views on just bringing back the confidence and stuck projects.
The struck projects is an extremely difficult situation, and there are what Amit mentioned. I agree with him that there could be some other developer who takes up over the projects. Some of the projects I see which seem totally a lost cause, but I feel the buyers have to form an association somehow, and then approach the government for some kind of a funding, which is that long-term funding at low cost. And then get some another developer manager or someone to complete the projects, because some of those projects the cost the buyers have bought that apartment, for example, today the cost of construction is literally more than that. So it's just it's completely impossible situation.
Very good thought, Anshuman.
The extreme one.
Let me quickly come to you, Pankaj. A lot of what Amit Bhagat is what you also resonated. You said, distressed projects are coming to me, I would be happy to take them, but look at the liability that I go into that project with, and the buyer's expectations of getting, interest, delayed interest cost, penalty, which makes it unviable for you to take on distressed projects and complete them.
So stronger developers would definitely love to get into distressed projects and turn them around if they are assured of a clean slate. Nobody wants to get into the past liabilities and the past sins of the previous developer. So if I can be assured by RERA or by somebody, and RERA is the authority to say that, okay, you're responsible for your acts of omission and commission from herein on, but not the previous penalty. In that, the main unquantifiable issue is that of compensation for delays to
you
the old
can't take care of it, because then the project becomes unviable. It's been stuck for 10 years.
So many customers in many of these stalled projects are saying that, okay, we just want a house. They're not investors. They want a home. They've been waiting for years. But some other customers in the same project would say that, no, I've been paying EMIs for years, and I need to be compensated for the delay. So right now, like Amit said,
so
there is 100%.
The end buyer has to become a priority, and we have to give that hope. Unfortunately, gentlemen, we've run out of time, but Anshuman Magazine, Mr. Sharma, Amit Bhagat and Pankaj Bajaj, thank you very much. It's been an extremely interesting and useful discussion and debate. Why real estate matters, I'm just going to end on that note. It can restart economic growth, we know that. It will contribute 13% to GDP by 2025, has the potential to create millions of jobs. If this government is serious about it, it needs to get that kick-started, supports over 300 key ancillary industries, and the potential, as IBEF says, is about $1 trillion by 2035. But, and this is a big but, 80% of real estate is residential housing and not commercial. So unless the government finds a way to revive housing demand, confidence and long-term investors are back, makes RERA more effective, these numbers may just end up being on paper. There's no reason why it should be. We will sign off saying, where there's a will, there's a way. Goodbye.